Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mostly green arrows around the world today. Following our lead, in Asia, the Shanghai is up 2.7%, and the Hang Seng is up 1.2%. Europe mostly higher as well, up a little over 1.5%. Quite a tailwind, wouldn't you think?
Yes, it is. And I'll tell you, Hang Seng is a hard thing to say. It took me about 5 years before I figured out the right pronunciation.
One.
It is, but you know what? They are providing a tailwind. You have the Shanghai up 2.7%, Hang Seng up over 2%, Europe broadly higher, all following our lead that, basically, Janet Yellen came out and let the doves fly. But if you look at the charts have been, trending somewhat decent. You look here at the FXI and you'll see that, this trend off the lows has remained intact. It's been above the 8 and 21 day pretty much, for almost 2 months. So now the question is, can it take out this prior pivot and see the 200 day, which is, right around here. And if you look at where the FXI has come from, it's come, quite a distance. And it's actually, traded above the descending channel here and held above it. So you take a closer look here, so if you have a little bit of old eyes like me, you could see that, all in all, decent action here. Held the 21 day, now you'll see if it could take out 34 and the 200 days all the way up there. As far as Europe, it's been a little wishy-washy, but yesterday, what did it do? It engulfed this entire range, just like our markets. So it engulfed the range and also held above the 21 day. So now, if the EWGs could take out this spot, it could see its 200 days. So lots of areas around the world that have reclaimed all the momentum moving averages are starting to, take a little bit more structural, relieving some of the structural damage. So anyway, I wouldn't say, you go out and just go nuts here buying Europe, but at this point it's good to notice if this big, macro trend that we've been below changes. So this is your next spot if you've been, traveling this tactical range up, maybe you trim a little bit into this, but, just so if you have short in the brain and think it can't go higher, just remember how far up we were and how we're just coming into, the descending channel right here.
S&P futures are up 10 to 12 handles, giving some nice follow-through to yesterday's upside. What are some levels of resistance here?
Well, what's cool is, I showed how we broke above the descending channel and then we held above it. So I just showed you how Europe was just getting to there. So we're actually leading Europe. And, today it's good to see the futures up, 10, 12 handles because yesterday we had a strong session. And traders live on follow-through. We like when stocks and markets close strong and then open up the next day. The same way if they close weak, you want to have some downside follow-through. So being up 10, 11, or 12 handles is probably good for most traders on our VTF. So if you look here at the SPX, you will see that even after this big double bottom that we had here, and then when it reclaimed the 8-day and the 21-day right there, this showed you your commitment. We've had a really nice trend above both moving averages all the way here. This was your descending channel here in the US. Okay, that was right there. So we came up to it, failed the first time, held in, blasted above, and then we had this new upper range that we wound up holding yesterday. We engulfed these pivots that I went over on Twitter. Here's your new resistance, and now it does seem as if your next spot comes in closer to 2,075, and then this peak is all the way north of 2,100. So this trend is intact. I wouldn't say you chase an up open, but if you're long the spiders like me, I've already sold 2/3, and if you're looking to fade a move, make sure you do it versus a 15, 30-minute high because people who tried to fade moves here that didn't have stops might be rolling it up, and who knows if their accounts are already blown up.
The Russell blasted off yesterday, taking out some resistance of what some would thought would be a right shoulder of a head and shoulder pattern. Do you think the 200 moving day is next?
It could be, and we talked about that yesterday. Every bear out there was isolating the potential of the head and shoulders pattern.
Right.
But in order for that to happen, a right shoulder needs to build. And if you look here on the chart, look at the Russell. It looked as if you had a left shoulder, a head, and if this right shoulder was going to build, usually the bears would be able to reject price here at 107.78 and then 108.50. Well, look what happened. Pow. Okay, so right there, you had to switch gears and say, you know what? This isn't a head and shoulders top pattern. It's just a consolidation, area above the 21-day, and let me get out of the way and maybe cover. And like Chelsea just said, here's your 200-day right there. So if you happen to have gotten long yesterday, perhaps sell a little bit. This gap probably gets filled, and then here's your 112 where you have your next resistance spot. So that's what we do as traders. We switch gears. You have potential patterns that set up, and then if they get negated or blasted through, you get out of the way. I'm not saying you had to go long the Russell, but if you didn't cover and you added this whole way up, you know what? You're not following the charts. You're following your own opinions.
Technology led the way yesterday with the Qs closing above the 200-day moving average for the first time this year. What's next here?
Finally, a little bit of authority in technology. And we always love when the market is led by technology. And if you look here at the Qs, you'll see that you had this tight range that it was holding and going sideways. And then yesterday, blasted off above this upper level flag. And the Qs never even hit the 21-day, like some of the lagging sectors. So that did show you some power. So if you take a closer look here, you'll see a lot of people who focused on the Qs, they had a good reason why. So now there is an open gap from with last year right here. So in order to get into that, it's got to get above this 110, and then we'll see how much it could fill. I wouldn't say buy the open with both arms spread wide, but if you went long yesterday, you sell some, and then we'll figure out if we get a gap up that holds to go sideways again for a little bit more action. Like remember this gap up, gapped up, held, tried to fill it here and reversed, and we'll see if today is an exhaustion gap or just another day of gains that could take us a little bit higher.
Oil and banks did lag yesterday. Do you think they might play a little catch up here?
Well, oil's up a little bit this morning, and everyone was pointing to how oil is going to go back to the lows, but meanwhile it held 38. And then you also had, the banks where when you have a dovish Fed, meaning rates aren't going to go higher, they try and sell them, but they couldn't really break down, so it didn't give the bears any ammunition. So you go look at the USO here, you'll see that I talked about 974 potentially holding. Well, it went below it and then reclaimed it, so it didn't really fall apart. And at this point, not leading the tape, but I guess as long as this area holds and doesn't start to falter, it's not that much of a headwind either. You also have the XLE. The XLE made a double bottom at that 60-40 pivot that we put in the note, saying here is your spot. Well, it held it. So now we'll see if it gets above this spot. This little pivot here is 62. If it gets above 62, maybe it tries to play a little catch up because the old high here is until 64. As far as the banks, I don't think you should overly focus on it, but the banks did hold the 21-day, which still is deemed somewhat okay. So as long as it holds above this 22.15, it won't provide too much of a headwind. It just doesn't have to lead. At this point, technology is leading, and so are the small caps.
Yesterday, we made a pretty good call to buy the weakness in high beta tech stocks. How did Netflix work out for you and all of those that followed your lead?
Well, if you remember, you said, usually into weakness we buy high beta tech. What's my focus? Well, it was Netflix. And it actually wasn't the best one, but at least you need a focus, because you don't have to be in everything to make a living as a trader. So for me, I was like, let's focus on Netflix because Netflix had a day one. And if you look at Netflix, from the chart, okay, it was a good risk-reward spot where here was, your support. It woke up, so I went out long. Yesterday we talked about adding to Netflix through yesterday's high of 101.40 or even 102.40, and then you had a nice day above 104. So at this point, I'm still long some. I would say trim into this 106 area because I always say day 3 is usually a better sell than a buy. To be honest, the real money was made in Amazon and Google. Amazon, I talked about, could we hold this, prior low here, which was what, 575, and then it took out this resistance and closed well, and it's up a little bit now. At this point, there's really not much resistance in Netflix until, somewhere right around here, and then even, a little bit, further north. So at this point, some people just want to short it. I would be careful because it just consolidated for 2 days. I don't think you have to chase it long, but it doesn't mean it's a short. If you bought it yesterday, you're getting rewarded. As far as Google also, we said, can 750 hold? Well, you had a nice red dog reversal around this 750 pivot, held the 21-day, and actually closed above, this resistance. So at this point, does it look like it can get back to 800? It could, and then you have this little 780 along the way. So if you are long some overnight because it was strong yesterday, sell a little bit and then trail it and make sure that the 8 and 21-day trend still holds. All in all, the FANG names are acting very well, even though everyone bashes them on TV almost every day.
Apple was at another resolution spot yesterday, and it happened to be on the upside. Scott, did you happen to buy Apple yesterday, and are you still holding it now, if so?
Two good questions. Well, at first I wasn't sure how it would work out, which no one does. You never really know how the day is going to unfold, so that's why we try and put a plan together. And we talked about, can 104.80 hold, or 105, to continue the trend, and can we see some power? And look at the chart here of Apple. So Apple did hold the 8-day moving average, showing strength. I just showed you sectors that went down to the 21-day moving average. So this showed relative strength. It cleared these pivots. I did go long yesterday. I am long now. I sold a little bit pre-market with my friend Robert Hirsch sitting next to me as I showed him my process. But it does seem as if we can get close to 110.50 because that's the 200-day. Lots of things are getting to the 200-day. So I always sell a little bit, and now I'll try and hold and figure out if it can trend. This engulfed an entire flag, so to me, that was a telling sign that it was showing power to get some follow through, and I'd rather use a sign from the chart versus the talk that's out there saying it can't happen.
In social media, Facebook has been on an absolute tear, which we've covered several times so far. Do you think we might see a new historic high here? It's
going to maybe kiss it today and figure it out,
yeah.
But hopefully it doesn't kiss and tell. But anyway, the chart tells you a lot. And we've been pounding the table on the stock, and I remember I'm like, it's slow and it's just inching up, and then finally yesterday, pow! The shorts that were in there got squeezed and it extended. If you look at the chart, I talked about two good areas to buy it. One, when it took out this 110.50, okay, which was right here, didn't get much traction but held. And then I put another chart on Twitter about 102.50, and now all of a sudden, boom! And what did it do the whole time? Wow, what a coinky dink! It's been above the 8-day moving average. So now here is the historic high. It's probably right there. Two things could happen. It could get above 117.59 and squeeze the out of the leftover shorts and close above it and continue, or it could push through, create another tail, with maybe a short-term, double top, which the bears will hang their hat on, and then figure out what's next. But at this point, it has come a long way. If you're a new buyer here, I'd be very careful. And just because it's come a long way, it also doesn't mean it's a short. So if you're looking to short it, use a 15, 30-minute high perhaps, so at least you have a stop and it's calculated.
Some steel names acted well. Scott, I know you tweeted one yesterday. Can you tell us which one it was and what the plan is?
I could tell you, but then I might have to kill you.
Please don't. Please tell.
U.S. Steel, letter X. I think it's a B setup. So yesterday, right around 3 o'clock, I'm like, I kind of like this. You could be long steel versus 1560, and that was this is the reason why. Here was yesterday's low, so I'm like, you probably be long a little bit of this here, and if it gets through this 16, perhaps add, because even though you've had a nice move, it's now consolidated for multiple sessions, and you could see additional gains. Not a huge A+ setup, but the stock was a heck of a lot higher, and I do think that there could be some room towards I would say, what is this, towards 20-ish, but again, you want to take trades along the way, but at this point it's consolidating and holding, so maybe you see that. As far as FCX, it's lagging X, but it too, it's come a long way off the lows. This was my treasures for trash trade in my 2016 report that already doubled. So we'll see if this one could play catch up too. I'm not in this one. It's holding the 21-day. It's going to have to get above this little spot here, which is 1048, and then your next spot is 1145.
Gold cleared the 3-day range that we isolated yesterday morning. Do you think this is just a trade, or do you think it makes new highs on the year?
Well, I think for those who are focused on that 3-day range heading into Janet, they had a good trade. I'm not sure yet whether we could see highs on the year. You look here at the chart of the GLDs, and you'll see this is your 3-day tight range, and traders love tight ranges, and this was one of them. Okay, here's your support. It traded above it, filled the gap, so if you were looking for that trade, there you go. If you were looking for more, you got to figure out if today's weakness could be bought. So it's down a little bit today. I would say go to your 5-minute chart to see where support is, your 5-minute chart. You go look at the move yesterday. Here's when it took off, and then it wound up holding this 118. So I would say for commitment to stay there, I would think GLDs should hold 118. If it gets below 118, it's back to this choppy, rangy trade that has definitely been driving some gold bugs to bug out because there hasn't been much continuity here. But you could say, all in all, it's still consolidating what's been a big 2016 move. So as long as it stays above this spot, perhaps this channel could lead to higher prices, but we shall see.
Now, with only 2 days left in the month, do you have any closing thoughts for us?
I just think that a lot of people are trying to fight this move. They're looking for a top instead of good setups. And as markets broaden out, good setups happen. And as a trader, that's what you want. You don't want opinions. You don't really care about the macro. You don't care about the bloated balance sheet that the Fed is creating, which it is. And maybe at another time, it's not going to end well. But thinking that it's not going to end well isn't a trading strategy. That could just stop you from doing things that look good on the chart. So let's go with the charts for now. And know out there that maybe things can change fast, and if they change fast, you could change your gears. Like yesterday, my title was tread lightly. Whether you were long or short, we were at another decision spot, so you had to tread lightly. So we're entering the blackout period. We've had a big move. If you're long overnight, sell some. If you're flat overnight, see if today's gap holds, and if it does, maybe look for some of the strong stocks we talked about. And if all of a sudden we gap up and we fail and create this big, enormous topping tail, maybe then, it's time for a little bit of a rest. But until then, stay with the trend, because the trend is your friend until it's not.
All right, I think that concludes today. Everyone, have a great trading day.